Dumelang. We're going to be doing question 2, which is company financial statements. It's worth 63 marks. It's supposed to take you 39 minutes to finish this. We are given information relating to Ruby Robotics Limited, which is a private company. Ruby Robotics Limited is a South African listed company with authorized share capital of 2,500,000 ordinary shares. I like that because that might come in handy later on. They import, that is also important in case they ask a question about prices and stuff. And they import robotic parts and components to use in the commercial and educational fields. They also earn a commission when selling. So we earn commission when we sell our two manuals from Masingita. So Masingita is the one paying us commission when we sell how to manuals which belong to Masingita. They operate at an intended gross profit on sales. Please note that this is not a markup, instead it is a percentage. They're telling you that gross profit percentage is 60% of sales. Their latest financial year end is 28th of February 2022. Then they said to you on 1 March 2021, they had 70% of their authorized shares in issue, which raised a 6.3 million capital. I will highlight that and just calculate the number of shares that will be issued at the beginning of the year, because the 1st of March will be the beginning of the year, even though yes, it will be the beginning of the year, because they told us that the financial year end is the 28th of February 2022. Then they said on the 1st of August 2021, an additional 500,000 shares were sold at 40 cents each. And this has been recorded. I highlighted that no shares were repurchased during the financial year. Pay attention to that, right? And be next to it. Okay. And immediately when I look at my pre-adjustment trial balance, the first thing that I'm going to look at will be my nominal account section. But before I look at my nominal account section, just above the nominal account section, I see accrued commission income there on the 1st of March 2021. That might have been for last year, so we didn't reverse it in the current year. We'll read more later. But immediately after nominal account section, I'm given sales. I'll take that value and put it right in the statement of profit or loss. Okay, that will be 14,500,700. All right, 1 mark. Let's continue. Then we have debtors allowances of 270,200. I will take that and put it right in my statement of profit or loss. 1 mark again. And what else are they telling me here? What are they giving me? They're giving me commission income, packing material, and then I've got ordinary share dividends. Note that when you have ordinary share dividends in your trial balance, those are dividends paid. And I'm just gonna go back and see if they said anything about dividends. That's a wrong question there. I don't see anything about dividends here. Now, the only conclusion we can reach is that those dividends that were given in the pre-adjustment trial balance, those were interim dividends. Commission income, just check if it's entered there in your statement of profit or loss. It is entered. What about packing material? Let's check if it has been entered for you. No, packing materials have not yet been entered. All right. I will leave it for now. I'll leave it for now, but I will open brackets there for packing material and just write that value, which is 49,000. Packing material, which is 27,000. Okay, commission income was 49,500. So I will just open brackets there and just write in brackets 27,000. Since it was not written in this case. Okay, let's move on. The first adjustment under additional information that have not been taken into account is water and electricity account of 2.8 for March 2022 has been paid. That is for next financial year. Remember, our financial year end is the 28th of Feb 2022. That 2,800 is a prepaid expense. We need to deduct it from water and electricity as it has not yet been incurred. All right. I'll get to that. But I just want to look at my adjustments and see if there's any adjustment that talks about return of goods or the sale of goods. And I don't see anything. All right. That is why I'm going to go straight to my statement of profit or loss and just close the sales and calculate my total sales. I was not given cost of sales, so I'll go straight to the information that was given in the first page where I was told how to calculate my gross profit. I highlighted it. Gross profit on sales of 60%. So we know that gross profit will be 60% of sales. You just go to your sales and multiply them by 60%. It'll give you gross profit. Work in reverse operation, you will take that 8,538,000 to 300 minus 14,230,500. That will give you cost of sales. Remember to put it in brackets. Put that 5,692,200 in brackets. All expenses must be shown with brackets. With brackets. When you show it with brackets, you're simply saying that I'm subtracting it. Unless obviously it's inside the shaded box. So you will only subtract or add them once you get the total. Hope I'm making sense. Okay. As I've said, for water and electricity, I'm going to take that 2.8 minus it from water and electricity. It has not been incurred in the current year. It'll only be incurred in the next financial year. And my water and electricity will go to 33,600. That 2,600 will be prepaid expense. Prepaid expense will be recorded in trade and other receivables as such. One mark again. Okay. Then they said the bookkeeper forgot to reverse the accrued commission income at the beginning of the year. Now, Ruby Robotics Limited changed the arrangement and now commission is paid up front. Okay, I'll start with the first one where they said accrued commission income at the beginning of the year was not reversed and the bookkeeper forgot to do that. I'm going to go and check my trade and other receivables to check if I do have accrued income there. Yes, it was given to you in the trial balance. I can see that. Here it is. Okay. This was accrued last year, not this year, because it is given to us on the 1st of March. So it was for last year. I am going to check if we recorded it this year by looking at trade and other receivables, because that's where your accrued income should be, all right? That is because it's for commission. So commission is income to us. Let's go to trade and other receivables. There it is. So it was recorded in the current year as accrued income whilst it belongs to the previous year. The fact that it was recorded in the current year, it means that it was basically added. It was accrued last year. And the fact that we still have it there, it simply means that we received the money, but we forgot to reverse it. And to note that it wasn't income for the current year, it was income for the previous year. The least we can do now is to take it out. Take it out of commission income as it belongs to last year. All right. And at the same time, it's not an accrued income for the current year. Note that if it was for last year, we are right at the end of the year, and that was accrued income is a current asset. A current asset tells you that it must be received within 12 months. We are at the end of the year. That income was received. Okay, we know that it was received and it was included in commission income. Now, our duty is to subtract it from our accrued income in trade and other receivables. Moving right along. Now, they say we have changed the arrangement and now commission is paid upfront. So Masingita pays us commission upfront. Commission received, meaning that it's included in the amount of commission income we are given in the trial balance, will be, we actually received commission for manuals that will be sold from the 1st of March to April. Okay, and that commission was 9,500. So this commission was for the next financial year because we are going to sell those manuals in the next financial year in March and April. But we received money now. What we need to do is to go to our commission income and subtract that 9,500. We received it in the current year, but we will only earn it next year, which qualifies it to be income received in advance. Income received in advance is a liability and it will be recorded in trade and other payables as such. Done with the second transaction. Let's go to the third one. A robbery took place and 6,000 was stolen from the cash register as well as 20,000 worth of stock. Okay, we lost cash worth 6,000. We also lost stock worth 20,000. The insurance company had advised that the cash is not insured, right? There, that changes everything because it tells you that this 6,000 here is a loss that we will never get back. That's why we will have to go to the statement of profit or loss and recognize it as loss due to theft and 6,000. Note that this cash was taken from our premises. It was not taken from our bank account. Therefore, we will go to cash and cash equivalents because it is cash that was in our premises. It will be subtracted from cash flow because that was part of the cash flow, meaning that our cash flow now will be sitting at 4,000 Rand. All right, let's continue reading. And then they say to you, but the stock is insured under the following clause: stock loss up to the value of 50,000 less an excess of 15% of the claimed amount. So we have to, they will insure us up to 50%, but I mean up to 50,000. So let's say we lost stock worth 60,000. Then the other 10,000, we're going to write it off as a loss due to theft immediately because the 10,000 will not be insured. We will not get it back. So it's up to 50,000. For any amount exceeding 50,000, we will not be insured for it. Still here, we lost 20,000 worth of stock, right? So we are insured. That 100% of 20,000 is insured. But the insurance company will only pay us an amount less the excess of 15%. So you will take 50,000 times it by 15% and get your excess. That excess we will never get it because the insurance company is only to pay out 85%. Excess is the amount, additional amount that you need to pay to the insurance company so that the insurance company can pay you the value of the stock that you are insured. And the fact that we are paying them this 15%, it means that when they pay us that 20,000, we actually lost the 15% that we paid to them. Okay, we lost it. We will never get it back. So it's better when you pay that 15%, they shouldn't even, they will simply pay us back 85% of that. Okay, they will pay us 85% of that. They do not cover 15% of the loss. They only cover 85% of the loss. So we are going to take that 15% and add it to loss due to theft. Okay, so take the 20,000 times 15%, and that is a loss due to theft, which will take us to 9,000 Rand. That 15% will give us an amount that we have to write-off as I have shown you here. However, the other 85%, we are going to receive it, and they told us when we are going to receive it, they will pay us that amount in March. So that amount that is still accrued, which is the other 85%, we are going to include it. I prefer to say it's insurance receivable in trade and other receivables, but here we are going to include it under accrued income, and that will be 17,000. It will give us our accrued income of 17,000 rand. Done with that. Let's move on to the next one. Then they say to you, the front security door was damaged during the robbery. Ruby Robotics Limited paid 4,000 to have the door repaired. So we paid 4,000 to have the door repaired. The payment was incorrectly recorded as repairs expense. I'm going to stop right there and correct it because it was incorrectly recorded as repairs expense. I'm going to go to my repairs and subtract that amount because they said it was incorrect. And then I'll stop, go back and read as to what is it that they wanted me to do with that 4,000. Then they say the landlord acknowledged that it was his responsibility, all right? So it was the landlord's responsibility to repair the door, and said that they may deduct it from the February rent that is still owing, all right? And one important thing, they said rent remained unchanged during the financial year. That's where I'm going to stop. Now, when I did this with my students and those that I tutor privately, most of them made a mistake of saying that 4,000 is reducing our rent expense. It's not reducing our rent expense, people. It is simply reducing what we are going to owe the landlord, but our rent expense remains the same. It tells us that the rent expense that we have paid, the one that is recognized or it's given to us in the trial balance, that rent is only for 11 months, and our rent expense must be for 12 months. Okay. Please note that it wasn't given honestly in the trial balance, but it was given to you. It was already entered for you in the statement of profit or loss, meaning that it was given in the trial balance. That 15,000, that 115,500 is for 11 months. We are missing 1 month's rent, and that is still our expense in full. Okay, that 1 month's rent is still our expense in full, right? So what we take is that we're going to take this 115,500 and divide it by 11 to determine the rent expense that is missing, which is 10,500. So our rent expense for the year will still be 126,000, and it has not changed. This is for 12 months. Our rent for the 12 months will be 126,000. However, we are supposed to owe the landlord 10,500. But because we paid for repairs on behalf of the landlord, those repairs will reduce our accrued expense. It doesn't reduce our rent expense, but it reduces our accrued expense. I hope that is clear. We still are going to pay 10,500. It's just that the 4,000 of that 10,500, we paid it on the landlord's behalf for repairs. So we still owe the landlord 6,500. When you add that 4,000 we paid for repairs and this 6,500, it gives us 10,500. It was the landlord's responsibility to pay the 4,000 rent, but it doesn't reduce our rent expense, people. It is not reducing our rent expense. Our rent expense still remains the same. It is just reducing what we need to pay to the landlord. And when you add the total amount that we have paid, we've actually paid the landlord that 10,500. Well, we're still owing 6,500, but at the end, we are still going to pay the 10,500. It's just that the 4,000 was paid on the landlord's behalf. So the landlord won't have to pay it to whoever was repairing the door. We paid that person, but that person was supposed to be paid by the landlord. So ultimately, after we have paid for this accrued expense, we will still have paid the 10,500. It's just that the 4,000 didn't go directly to the landlord. It goes to whoever the landlord was supposed to have paid. The 6,500 will go directly to the landlord, meaning our total expense, the money that still will go out at the end, will be 10,500, which is our monthly rent, which is the rent for February that we are still owing. I hope that is clear. All right, let's move. Then they say 50,000 of fixed deposit will mature on 30 June. All right, what are we going to do with that? I need you to write this down. Okay, write this down. This 50,000, because it matures in less than 12 months. Matures means that it'll be paid out to us. It will reach its maturity. It is paid back to us. Don't make a mistake of thinking that your fixed deposit and your bank account are the same. No, they're not the same, right? Your bank account is where your money goes in and out. Your fixed deposit, you will take money out of your bank account into the fixed deposit. I will show you shortly now. All right. So it will be paid back to us within 12 months. We therefore need to, within the next 12 months, okay, it will be paid within the next 12 months. We therefore need to record that in cash and cash equivalents of the current year. So we are at the end of the financial year, which is the 28th of February 2022. But we notice that, oh, we have a fixed deposit that is going to come back to us, will be paid into our bank account in the next 12 months from year end. Okay, so when we look forward to the next 12 months, we realize that we are going to receive a fixed deposit. That amount that we're going to receive within those next 12 months, which is the next financial year, we are going to record it now in cash and cash equivalent because it's equivalent to cash right now. Okay, and that's what the current asset is, something that I hate to say something, it's a resource we expect to convert into cash. In this case, we are actually converting our non-current asset into a current asset, and immediately it changes. When a fixed deposit changes to be a current asset, you take it to cash and cash equivalents. I hope that is clear. Okay, we're gonna take it to cash and cash equivalents immediately because it changes from being a non-current asset to being a current asset, which qualifies it to be cash or the cash equivalent. All right. Actually, if we pay someone, we can say that we can make a payment now and make it go out on the 30th of June when you receive that fixed deposit. So it will be shown as a cash outflow right now, even though that person will only receive it on the 30th of June. Okay. Now, well, that is a different story because when it's like that, then that person will be recognized as a liability, blah, blah, blah. But we just here, I just want you to understand the fact that because that 50,000 matures in the next 12 months, we are going to recognize it as a cash and cash equivalent right now. All right, so we're going to go to cash and cash equivalents and we will write there a fixed deposit maturing. Okay, it's a fixed deposit maturing, meaning that it is coming back to us. Let's go to cash and cash equivalent and record it there. In our cash and cash equivalent, we'll just write that fixed deposit that is maturing. And there we go. fixed deposit maturing, and the amount will be 50,000 rand, and we're done with that. Let's move on. Returned 24,000 worth of stock to a creditor as it was not compatible. I will stop right and go to the creditors, which is in trade and other payables, and subtract that 24,000. See, guys, you deal with it immediately, not later, immediately. I didn't allocate certain marks. I'll actually make a video just to show you how I have allocated all the marks. Okay. But at the same time, because we returned that stock, I will go to my trading stock calculation, and I realized that from my trading stock calculation, there's something that I didn't subtract. Let me just go straight to it. So my trading stock, well, this one is starting with something else. Okay. My trading stock in the trial balance is sitting at 2,467,000. I am going to subtract the stock we lost, which was 20,000, and I'm going to subtract this 24,000, which relates to stock that was returned to the creditor. Guys, accounting is easy. Way, way too easy and so enjoyable. Accounting is what runs the world. People normally say it's doctors and everybody else, but look at what happened to Steinhoff. Just one accountant destroyed the entire enterprise. And if anything goes wrong with accountants, the whole economy collapses, which affects everyone. It's one important field. That's why I always encourage my kids to study chartered accountancy when they get to varsity. Accounting is such a wonderful subject, guys. You have no idea. It just needs you to practice, 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 and that's it. Just keep on practicing. And don't study to memorize, study to understand. And when you do that, everything will go right for you. And you will notice that most of the things we're doing now, I did them way, way before. I did them a long time ago. Just check out the different videos where I dealt with provision for bad debts, where I dealt with trading stock deficit or surplus. When you get stuck and you don't understand what's happening, just go back to those videos and check them out. And trust me, you will never fail. Distinction is the only option, to be honest. Just remember that talent will always, actually hard work will always beat talent when talent fails to work hard. Hard work will always beat talent when talent fails to work hard. That's why I believe that students that get distinctions in my subject, they don't get them because they're smart. Yes, they should be smart, the fact that they got a distinction, but another factor is that they really, really worked hard. Being smart, it's all about working hard after all. All right, this is what I was talking about. I just wanted to fix it quickly. I'm going to go to my trading stock calculation. Okay, in my trading stock calculation, I will start with that value that was given in the trial balance, subtract stock that was returned, and subtract the whole amount of stock that we have lost. Remember, of this stock lost, we actually lost only 15% of it. We'll never get 15% of it. But the thing is, it's not there in the warehouse. Okay, it was stolen, it's not there. That's why we have to reduce our trading stock in the warehouse. But the actual loss will be 15% because the other 85% will be paid back to us by the insurance company. Okay, I hope you're good then. That's what I wanted to show you. That's why I was just chatting to you guys a little bit just to pass time and corrected that. Okay, now let's move on. They say that they agreed to credit our account less a handling and repackaging fee of 1,200 as per their returns policy. So these guys are going to charge us 1,200 for the fact that we are returning goods to them. Probably it's because we opened the package and whatsoever. So they're going to charge us that. That is an expense that we never expected. Therefore, we have to put it under expenses as repackaging fee, and that will be 1,200. But this repackaging fee will actually result in us owing the creditor more. And that's why we're going to go to our trade and other payables and add that repackaging fee of 1,200. We're going to owe them that amount when we return the goods, increasing our creditors, trade creditors to 9,247,200. I like the millions because this is what you actually work with in real life. And when you get to varsity, we're just dealing with millions, not these 1,200. But obviously, we need to cater for small businesses as well. Yeah. Even the cash flow here was very, very good, which is our next video. Our next video will be on the cash flow statement. Yeah, which is highly, highly debatable because yeah, certain questions they are questionable. I feel like it was a good question, cash flow. But some of the questions that were asked, yeah, I feel like they could have asked them better, to make sure that they get the best out of students. But somehow I felt like they were just asking them to trick students, which is unnecessary because we're testing understanding and making sure that the student masters their concept than to trick them in a way. All right, let's just move on. Yeah, that cash flow statement question. Yeah, it was a good question, but I feel like they could have asked something to get the best out of students. Could have even made it complicated a little bit without tricking them. A debtor who owed 6,000 was declared insolvent. I'll stop right there. This person is owing us 16,000. Okay. All right. Let me just read. So declared insolvent means obviously this person is bad, is a bad debt. It's a bad person. Their estate paid 10,400. Okay, that's good. That means 16,000 debt, they paid 10,400. The difference between those two will be bad debt. Must I do it now? Obviously, they're saying that it must be written off, so I have to do it now. I'm going to go to my bad debts and add the difference between 16,000 and 10,000 400. I'm going to add it to bad debts, which is 5,600. That becomes my bad debts, taking my bad debts up to 14,800. I'm going to continue reading and see what is happening there because I'm supposed to take that 10,400 subtracted from my trade debtors, but I just want to read further. And then they say no entries have been made for either transaction, meaning that for this transaction and for the bad debt, okay, my ticket's way too far than what I wanted to highlight. Okay, I wanted to say this 10,400 is the one that I was going to subtract from my trade debtors. But because of what they said even I was going to subtract 5,600 from my trade debtors. Okay. I was going to subtract only 5,600. But because they said even that payment of 10,400 was not recorded, it changes everything. It means the entire 16,000, because they normally tell you that the amount that was received was recorded. Now here, the amount that was received was not recorded. It was not recorded, and that creates problems. First of all, the fact that it was not recorded, it means the entire 16,000 must be deducted from trade debtors. I'm going to start with that one first. So I'm going to go to my debtors control and subtract the entire amount of 16,000. Normally, you will only subtract 5,600 because they'll normally tell you that the amount received was recorded, meaning that the 10,400 was already recorded. But here it was not recorded. You could have just taken that 6,150,000 minus 10,400 minus 5,600, which is the same as though you minus 16,000. Now our trade debtors will be sitting at 6,134,000, which is good, right? Now that 10,000 was not recorded. We're supposed to subtract it from bank. But when I go to my cash and cash equivalents, I don't have bank. And watch a video on cash flow statement where I explain if cash and cash equivalent doesn't include the bank, don't just forget about it. You need to check your current liabilities if there's bank overdraft there. Okay. And in this case, obviously, we were not asked the statement of financial position. I will just look there, 75,000. Okay, it's a bank overdraft. Money comes in. When money comes into a bank overdraft, now because we don't have statement of profit or loss here, I'm going to record that in my trade and other payables. And from my bank overdraft, I'm going to subtract 10,400 because it comes in. Any money that comes into your bank account, if you have a bank overdraft, it reduces that bank overdraft because bank overdraft is a liability. So if money goes in there, it reduces your bank overdraft. If money goes out, if you pay someone, it increases your bank overdraft because it means you're getting more and more deeper into debt you owe in the bank. That is when you keep on paying from your bank overdraft. We good? Sure. We good there? We good? We good? We good? All right. Let's move on. 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 Good people. The next question. What is it about? It's about provision. Let's get a lebala. Do not forget ungakhohlwa. Please. Provision for bad debts is just an estimate. It's basically a valuation allowance that helps us determine the correct value of economic benefits expected to be derived from our trade and other receivables, which is our debtors at the moment, right now. Okay, provision for bad debts, it's an estimate. That's why it increases on the credit side. Okay, it's not a liability, it's just a valuation that helps us correctly value the correct value we can get from our debtors right now, because that's what the financial position is all about. It wants us to determine the economic benefits we expect to derive right now. And these are estimates. Okay, provision for bad debts is an estimate of future debts that will go wrong. Okay. That is why we have to calculate our provision at 3%. I'm going to take that 3% and calculate my provision and go to trade and other receivables. I'll take that trade debtors amount of 6,134,000. That is the adjusted amount. Unless, if you don't understand this, please check the video on adjustment on provision for bad debt. Okay, I explained that thoroughly there. Take that 6,134,000 times it by 3%. Only the calculated one will come here to trade in other receivables. Guys, you know, my kids, like, I expect distinctions from them, to be honest. I'm just giving them accounting on a silver platter. Okay. That's it. That's all you do. That's it. And I'll just calculate my net trade debtors. It's 6,134,000. You minus 184,020. Honestly, if you've been watching these videos, you've been following every move that I make, this guy is getting a distinction. Accounting should be easy. Ubala, okay? Not the Bala family, but yeah, I think that's what it means. Ubala means easy, easily so. Okay, easily so. Could have just got a distinction here. All right, let's move on. Okay, that provision that I've just calculated, I need to compare it to the provision that is given in the trial balance. Okay, so I'm going to go to provision for bad debts now. I've done that already. I'm going to compare this to the one that is given in the trial balance. The one that we calculated is considered to be the accurate one because it takes into account information that was not taken into account during the financial year. Okay. So I am going to take that 184,020 to be the accurate one. meaning that I need to adjust the one that is in the trial balance. When I adjust it up, when you increase your provision, it's bad news, people. It is bad news because it means that you're estimating to write off more debtors. Therefore, the difference will be recognized as an expense. If the one that you calculated is more than the one that is in the trial balance, it is an expense. If the one that you calculated is less than the one that is in the trial balance, then it will be income and it will be recorded under operating income. This one, though, will be recorded under operating expenses. We are going to write it there as provision for betters. Show workings in brackets. It will be 8,020. Ubala, right? Ubala. Not Deswai and Loiso. All right, let's move on. And then they say trading stock to the value of 43,000 was used for demonstration purposes during the year. This must now be revalued at 21,000 so that it can be sold at a profit next year. We are reducing the value of our stock. Now, my kids were like, yeah, but sir, this one you didn't teach us. But I'm like, guys, when we reduce our asset like vehicles, the reduction of our vehicle is normally depreciation, right? What is depreciation? It's an expense. So anything that reduces your asset will be an expense. So you will simply look at the reduction here from 43,000 to 21,000. That difference will be an expense because it reduces your asset, which is trading stock. Okay. And it goes back to you understanding the definition. An asset is a resource we control, we use to generate money. If that resource is decreased, it means that future generation of money will be decreased. And anything that affects the future generation of money, we recognize it as an expense. Okay, so a reduction of your asset will reducing the economic benefits we expect to get from trading stock. That reduction of those economic benefits must be recognized as an expense, as it means that we have already used part of it. In this case, we have used part of it because we generated cash by putting this trading stock as demonstration for demonstration purposes. So people came in to buy because they saw it there. So that's why that reduction, we've used part of that asset. And since we've used that part of the asset, we are going to recognize the reduction as an expense. That's why I'm going to record it under operating expenses as trading stock devalued. You'll learn more about this when you get to university, and that will be 22,000. I think this was a problem-solving question. I think it was a good question. I honestly feel like it was a good question. Okay. At the same time, that affects your value of trading stock. It means that we need to go to the calculation I did earlier on for trading stock and reduce it by 22,000 Rand to 21,000 Rand. Okay. And now this will give me my total trading stock adjusted. And I'm going to read further. Now it says that the annual physical stock count. Physical stock count is what we have in the warehouse. If you watch my video on, it was on inventory, government paper inventory. I think it's part 1 of that video where I spoke about the difference between the warehouse and where these financial statements are recorded. Where I explained that Meyerton works somewhere in Pretoria, and Nestle head offices in Gauteng, they are in Bryanston, right? So basically in Bryanston, that's where you find financial accountants, and at the warehouse, it's where you actually have people that are actually counting the stock, how much stock is in the warehouse. So those people will send emails or will have a Google meeting or Google Meet meeting or Zoom meeting, and then they'll explain to us that, hey, you at the head office, I'm the one at the head office. You are the one at the head office right now, preparing the financial statements. You have no idea of what's happening at the plant. You have no idea what's happening at the warehouse. Okay, you're not there. You're just using source documents to record what is in your books. And according to the source documents that you have used, this is the value of stock you have. Okay, you followed everything, every protocol. All cash purchases, you used the bank statement. That information was found in the CPJ. You took it to the ledger. You took it to the trial balance. And then the ones that you sold for cash, the CRJ, cost of sales, you took them to the general ledger. Trading stock, you reduced it by that. It went to the trial balance. Ultimately, you got that 2,467,000. And then when you read the adjustment, you realize that, oh, there's more that happened. And then you adjusted everything according to your source document until you got that 2,401,000. That's you sitting in Bryanston, Nestle offices doing this. But now the people that are at the factory, the finance department at the factory is the one that has real records of what actually is in the warehouse. Would you trust the ones that are recorded by the person in Bryanston, or would you trust what you get from the warehouse? You will trust what you get from the warehouse because those people actually physically went into the factory plant and they counted how much they got in there. Okay. And after they counted how much they thought, that's what they actually have. That's what we actually have as stock. So we've got 2,364,000. And then they will have a meeting with the guy in the warehouse, which is you. You're working at Nestle Bryanston office, and they tell you that, oh, by the way, this is how much we have as our stock. Noodles and Primora and what else do they produce there? What else do they produce there? It's noodles, Primora. I don't know what else they produce there. But basically, this is what they have, right? And that's what they're telling us. And where are they? They're somewhere in Pretoria. Where are we? We are in Joburg, Bryanston. So who do we trust? Which value do we trust? Do we trust the value that is prepared by the bookkeeper or the accountant in the head office in Bryanston, or do we trust the information that we're getting from the warehouse? The answer is, guys, we're going to trust the information that we get in the warehouse because that's what they physically counted. Okay, that's what they physically counted. So my hand has to prepare all of this information and send it to the head office, okay? And then the head office will compare what they have in the books to what my hand counted there. And what my hand counted is less than what is in the books. So we have to reduce what is in our books. And that's why I was angry when my kids said, but how do we devalue? Because that's how I explain trading stock deficit. It reduces our asset. That's why we expense the difference. It serves the same reason as why we devalued that stock, the reason why we subtracting that 22,000 and the 22,000 was recognized as an expense. So this 37,000, we are going to recognize it as trading stock deficit in the statement of profit or loss. We good? So we're gonna put it here as trading stock deficit. Counting is too nice, guys. It's too nice. Okay. An advice from me, focus on accounting and maths. You'll enjoy your life. Is never about relationships and alcohol. There's more to life, guys. There's more to life. And this is what actually, it's even in the Bible. God says that look for wisdom look for wisdom as hard as you would for hidden treasure. So basically, guys, you're doing God's work by being smart. Okay. And I feel like if a lot of students were just dedicated to their education and achieving the best, this country will be way, way better. It is better. It's good. It's a good country. I get so angry when my kids say that when they graduate, when they finish matric, they want to go overseas. There's so much you can still gain from Africa. People are complaining about corruption, but you are the future. You've got the power to change that. I hope you won't be like the current people that are corrupt. You'll be better. All right. Now they say packing material used during the year amounted to 24,800. That is an expense, guys. Only packing material consumables used must be recognized as an expense. So I'm going to go straight to my statement of profit or loss. We had 27,000. I'm going to just recognize that 24,800 as an expense. You don't subtract it from the 27,000. Oh my God, I'm now competing with the other side. You know when you're done. All right. So the only thing that you will subtract from your packing material that you have there is the unused packing material, which is 2,200 in this case. Okay. That 2,200 will normally take it to the inventory note and record it there as consumable stores on hand. Got it? Easy, man. Easy. All right. Um, people haven't told me what puñeta means in Pretoria. I want to say it's puñeta, but I don't know what it means. Anyway, I hope it's not a swear word. Just hope it's not a swear word. All right, let's move on. Um, let's move on. Let's move on. Let's move on. Now it says here, additional provisional tax payments of 400,000 was made on the 28th of February, right at the end of the financial year. And this was not recorded. Damn. So that one, immediately when they say it was not recorded, provisional payment, it's a payment. So it affects what we have here. It affects our overdraft. It increases our overdraft because now we are paying. Okay. Okay. Let me just read further. I realized that I didn't start with the overdraft part. And then they say after this, income tax still owing to SARS at the end of the year was 65,000. So the one that we owe into SARS at the end of the year, we're going to put it here as a liability, all right, which is 65,000. But that 400,000, guys, I'm going to go straight and increase my bank overdraft because money is going out. We are paying. My bank overdraft will now increase to 464,600. I will mark the 10,400, mark the 400,000, and then mark that 464,600. 3 marks for that question. And obviously 65,000 will be 1 mark. Okay. But now, guys, I'm going to go to my pre-adjustment trial balance and check what I have there as SARS income tax. If it's on the debit side, it means I made provisional payments. There it is. So provisional payments will be amounted to 990, and then we made another provisional payment. Okay. And still, our provisional payments are smaller by 65,000, meaning that we underpaid our tax expense. That tells you that your tax expense was 65,000 more than your provisional payments. That's why when you recognize your tax here, you're going to take that 990,000, add it with 400,000, add it with 65,000. And that tells you that your provisional, your tax for the year, your tax expense for the year was 1,455,000. That tells you that your provisional payments for the year amounted to this. Okay, it was 990,000. You're gonna add it with 400,000. So these are provisional payments. They were less than our tax expense. All right, they were less than our tax expense. If they said we had SARS was owing us, then we're going to take this provisional payments minus what SARS is owing us because it means we overpaid. But in this case, we underpaid. It means we underpaid. So our tax expense was higher than our provisional payments. That's why we added that 65,000. Sisonke? Simuni. Simuni. Sisonke, right? Oh, wait. All right. I'm done with it. And then we've got a final dividend of 16% per share was declared on all shares in issue on the 28th of February. That's quite easy because I did this right at the beginning because I didn't know if we're going to use it. So issued at the beginning of the year was that 1,750,000. We issued 500,000 more. So we had 2,250,000. And that 2,250,000 represents the number of shares issued. We're going to take that and multiply it by 16 cents, okay? And that will give us our shareholders' final dividend of 360,000, okay? And then everything else, guys, you just enter it into your statement of profit or loss, okay? I just want to see what is it that we're missing at the moment. Let me see what we're missing. Okay, I don't see anything we're missing there. All right. Now, according to the question paper, we have interest income and interest expense. So we are just not missing anything. We are basically done, 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 done. Okay. I wasn't supposed to allocate the marks there. I didn't realize that they were given to me. Okay. And that is it. Okay. I hope you enjoyed the lesson. Check out the next video. You can try this question. Try question 3. It's on cash flow. Okay. It's on cash flow statement. You are asked to prepare this note and this note and these calculations here. And this one here. Just check my videos on cash flow statement before attempting to do this. Okay. And this one here. And then this one here. And this is the one that I was talking about. I felt like here it was a little bit tricky. First of all, they said calculate the amount of profit that was retained after taxation and dividends by completing the retained income account. Was the retained income account necessary? But obviously, probably the examiner found it to be necessary. And that might be confusing because they only said after taking into account taxation and dividends. Okay, what if there's a buyback of shares? I feel like they were just supposed to say, just prepare your retained income account instead of putting those extra things there. Okay. And and then they ask you this question, calculate dividends paid, which is a good question. Okay. But I feel like this question was supposed to come before this one here, because you need dividends to prepare retained income. Maybe I'm the crazy one. Okay. But the question paper is RO45. Thank you for watching. I really appreciate it. Please don't forget to subscribe. Don't forget to comment, like, and let your friends know, okay? Just let them know about the channel and ask them to watch. Oh, thank you, Pretoria. Pretoria is, yeah. I'm getting a lot of support from Pretoria. Thank you so much. Cape Town as well. Thank you. Cape Town is number 2. Joburg is number 3. I think number 3 is Soweto and then Joburg. But number 1 is Tshwane, Kopitori. I guess that's why I repeat Matlange. It's because they studied the work really, really hard. Thank you again. Thank you for watching. Don't forget to subscribe, like, and ask questions, all right? Khotso.